Welcome to the DeFi Dojo shorting and short farming and DeFi shorting seminar. Today we're going to go over what shorting is, how to short directly in DeFi, how to short farm in DeFi, and then how to leverage short farm in DeFi, and the associated risks with each of those strategies. The first half hour, more or less, is going to be dedicated to show and telling, and then the last half hour, more or less, is going to be open Q&A. So I'm going to go through this relatively quick. I'll give maybe a small couple minute area for questions at the end of each section, but we're going to start off with like super basics and then move from there. So the most basics are like, what is shorting, right? And most of you know shorting is where you have inverse exposure to the market. So let's say you're shorting Solana, which I am currently. If Solana goes up, my position goes down. If Solana goes down, my position goes up, right? That's shorting. The opposite of that is longing, where your position moves at a 1-to-1 ratio with the asset, unless you're leveraged. So how is shorting possible, right? Where does shorting come from? Without giving you like a full and extensive history on shorting, the basic answer is shorting is where a shorter or investor will borrow an asset at a certain price, sell that asset immediately, wait for that asset to depreciate in value, buy it back at a lower price, return it, and then keep all of the premium. So as an example of just direct shorting, an investor may collateralize USDC. I mean, well, in TradFi, they don't collateralize anything. They just do it off credit, right? They borrow on credit. But in DeFi, you would supply an asset like DAI or USDC. By the way, you'd be getting paid to do this, either 2.45% or DAI at a really juicy 7.17% APY. I like that because I like DAI. Borrow, let's say, what are we more bearish on? AVAX, Wrapped Bitcoin, or Wrapped Ethereum? Probably AVAX, to be honest. Maybe Link. I like Link, but I'm just saying. So probably AVAX, right? So we would borrow AVAX. Maybe we borrow $500 of AVAX against $1,000 of USDC, and we immediately sell that AVAX. Okay? AVAX then depreciates by 50% because we're in a super bear market. So now that $500 of AVAX is worth $250. We buy it back. We pocket the $250 that we didn't need to use. So that's pure profit. That's 25% profit on our initial $1,000 USDC collateralized, and we return the AVAX. That's shorting. That is shorting in a nutshell. And everything after that is a form of that. So when you see leverage shorts, that's exactly what they're doing, except they're looping that process. So a leverage short would be collateralize USDC, borrow AVAX, sell it for USDC, collateralize that USDC, borrow more AVAX, sell that, and then do that process. And as you do that, you will notice you're starting to get levered up on your initial position. So this is the root of all shorts, is just borrowing and lending and selling. So once you know that, everything else sort of falls into place. Shorting, like exactly what I just showed you, or leverage shorting, that is a very bearish strategy. I'm going to go over very bearish and moderately bearish strategies. So very bearish, direct shorting, leverage shorting; moderately bearish, short farming, leverage short farming. Why is short farming and leverage short farming moderately bearish? Well, it's because you have half neutral exposure and then half short exposure to your borrowed assets. So neutral exposure, or delta neutral, which means delta being change, neutral being doesn't matter, right? Change is still, your position is neutral, is where you borrow an asset. Let's say we borrow AVAX and we don't sell it. So let's say collateralize USDC, same scenario as last time, borrow $500 of AVAX, you don't sell it. AVAX goes up by 25%. Well, you can return it. You didn't make a profit. You're just holding it. AVAX goes down by 25%. You can still return it, right? It's like borrowing a book from a library. It may increase or decrease in value, but it's not yours. You have to return it. So you didn't gain anything from that, but you may have paid a little bit of interest. What you can do with delta neutral farming is you can take that AVAX, as an example, go over to, let's see, what does Beefy have for S-AVAX right now? There might be a nice S-AVAX pair. But you can go over, get a single side staking APY where there's no impermanent loss. So you're never shorting the asset because you never sell half of it for fiat. So let's say S-AVAX. What do we got? 11%. So not great, right? So that's 5% effectively on your initial if you're at 50% borrow. And it's delta neutral. So you have no impermanent loss risks. You don't have any liquidation risks in the farm, but you do still have liquidation risks on the borrowing and lending platform. So AVAX or Aave, you guys can correct me if I'm wrong, but the max LTV, I believe, is 85%. So it's 82.5%, and then you start getting liquidated at 85%. So if you borrowed 50%, that asset would have to increase something like 75% in value for you to start getting liquidated. So that's pretty cool. I like that. Okay, cool. And you would be delta neutral if you just did the borrow. But we're talking about shorting. I just wanted to give you guys that difference, because some people think if you borrow, you're immediately short. That's not true. You have to sell for you to start being short. If you never sell your borrowed asset, you've never shorted it. You're just market neutral, because it goes up and down. That does not affect your investment strategy value. So let's talk about what short farming is. Short farming, and we'll use a Beefy example, because Beefy has a lot of really great strategies right now. I have Beefy open twice because I like Beefy so much. I had steak today, so I mean, it was cut up. But let's look at. I really like the Matic USDC stuff today, so let's look at that. Matic. Yeah, what do we got here? Matic, die. This is a good one. 6.93%. That's not a good one. I feel gypped. Not a slur to gypsies, by the way. Didn't mean to. If any of you are gypsies, I apologize. Let's see. Man, I was seeing a lot better APYs earlier. Let's go with AVAX. There's a ton of AVAX stable pairs. I'm intentionally not looking at Alpha Homora yet because that's leverage. We'll get there in a second. These look incorrect unless the yields just tanked randomly. Did they? Maybe they did. Maybe all the yields tanked. Okay, here we go. USDT, AVAX. Well, yeah, these are, and we should have one from Pangolin as well up here. But let's look at these three, right? We have 181, 165, 156. Now you should note that these are going to be sort of artificially inflated because we're just having so much volatility. Like I think today, Solana is up by 30%. Hurts my farm, but luckily I opened my position, back at $47, so I'm good. But man, and also Solana is hitting the 8 EMA. We'll get to that later. So we have these three positions. So if you borrow 50% AVAX against your $1,000 USDC, and then you enter one of these positions by clicking on it, you also see the historical yields, which I always recommend looking at because the historical yields will sort of tell you the likelihood of these APYs sustaining this level. Clearly, it's more likely we hover around 40% than it is that we hover around the 100 and something percents. If you zoom out even farther, you can see that 40% is a very realistic APY for this pair, which I love because if you're getting half of that, because only half of your initial investment is getting yield, that's 20%. That's anchor, you guys. That's great. Okay, so you can zap in with AVAX. I have 25 AVAX right now. Oh, that's not right. This is, a different wallet. But so I have 25 AVAX, presumably, that I could zap in, right, and enter the position just like that, which is really cool. This is, again, borrowed AVAX, and then I'm farming, right? There's no liquidation risks on the farm side. I like that. As AVAX goes down in value, if it does, right, this is a bearish strategy. If AVAX goes down in value, what's going to happen is the USDT is going to purchase AVAX to make that LP equal again. So you're going to end up with more AVAX on that half, right? So let's say you enter with 25 AVAX. So that's going to be split into 12.5 AVAX and some amount of, let's say, $250. Now, as AVAX goes down, you may end up with 16 AVAX, but the USDC on the other side is also worth 16 AVAX. So when you exit your position, you're going to have 32 AVAX. If you borrow 25 AVAX and you have to return 32 AVAX, well, you have, should be super easy, 7 AVAX. So you have 7 surplus AVAX, right? Or a premium of 7 AVAX, or a profit of 7 AVAX. That's yours. You can sell that for realized gains. You can reinvest it. You can do whatever you want with it. my recommendation is taking profit in the form of adding collateral. So let's look at what I mean by that. If you look at my francium position, by the way, francium is an element. I think one of you guys pointed that out last time. So it's not francium, as my American compatriots like to call it, and myself. It's francium, as the element is so named. So I just added collateral here, so my profit kind of went down. Also, Solana's up 33%. So, you know, my plus 6 Solana is now down to plus 3 Solana, or plus 2.6 Solana. But the APYs are lovely, so I don't really mind. So here, you can see that I have plus 2.6 Solana. If I am bearish on Solana, which I still am, one strategy that I recommend is taking a portion of that. Maybe you take half of your surplus every other week, right? So maybe I take, if I have 2.6, maybe I take 1.3, convert that to whatever stable you've collateralized, and then go on to your borrowing and lending platform. For me, it would be Solend, and add that, in this case USDC, to your collateral. That way you've not only actualized or realized that profit, now it's in stables, right? You've also lowered your liquidation threshold on your borrowing and lending platform. If you want to be more risk on, you can then increase your LTV back up to 50% by borrowing more Solana and then entering more of that into the farm. You can do that. That's an interesting way of compounding this strategy, but not at all necessary. Totally depends on your own risk tolerance, risk profile, and desire to actualize and realize profits. Okay, so what do we like to short farm? In my opinion, L1s against stables. Why L1s against stables? Well, I don't think L1s will ever rug, right? They're L1s. The only one that has rug is Luna. And if you were short farming Luna, you would have made a ridiculous amount of money. Kind of. I mean, all the Luna you made as profit would have been worthless, but you would have been able to buy back the Luna that you shorted for nothing. So you would have made like 50% profit. Okay, but I like L1s and stables because, one, they are the most traded assets on their respective chains, so you're going to have really nice APYs. If you look at Solana here, we're looking at 977%. That's crazy high. I posted this on Twitter. You don't really get those APYs usually. Like, this hovers between 130% and like 60%. So if you're doing 50% LTV, you're getting something like 30 to 55%, which is still amazing on your stables. But what are the risks? So we talked about the benefits of the asset going down in price, right? If the asset goes down in price, you end up buying more of it. When you go to return, you have a surplus of AVAX. Everyone's happy you made AVAX. If you're short farming and the asset goes up in price, then that asset sells into USDC. So let's say we have the 12.5, you end up with 10 because it increases in value. When you exit your position, now you have 20. Well, you have to return 25. So now you have to go out and buy 5 more AVAX out of pocket in order to pay off your debt. So that's the downside, right? Short farming is a bearish strategy. It does not perform well in bullish conditions. It performs well in crabbish conditions because you're just getting all of the APY. Sure, that's amazing. I don't mind that. And it performs really well in bearish conditions because not only are you getting the APY, you're benefiting from price depreciation. I like that. So crabbish, bearish, wonderful. It does not perform well in bull markets. So let's say you opened this strategy when Solana was at like $26, right? You would be, well, if you do the pseudo delta neutral, you're not going to be down as much. But you would, if you're doing just straight short farming, you would be down a substantial amount on your position. So due to impermanent loss. So that's one thing you have to consider. Also, one of the reasons why I don't really consider these short-term strategies, if you want to do short-term shorting, sort of like what Keith was talking about on Monday, talk to Keith, talk to Groot, sign up for the one-on-ones, learn how to do leverage trading, learn how to do some meaningful amount of understanding those risks and maybe when to enter and close positions. That's not my purview. I'm a DeFi guy. I like moderate bearishness, moderate bullishness, not hyper leveraged up and down bets. Just not my thing. I'm not fast enough for it. I'm a slow and steady kind of guy. So so if we're looking at like L1s and stables, Beefy is a great place to look. CoinDix is a good place to look, but CoinDix is not going to have accurate APYs all the time. So if we're on CoinDix as an example, and we're looking for like BNB, LP, BNB, and like, oh, look at that. Well, not really good actually. BNB plus a stable. Let's see if we can find any. BNB, yeah, this is not bad, right? So we're looking at buy swap, 38%. That's pretty good, and that's like something to consider. So you'd click on this, and you'd want to look at the historical APYs. So this is down back to February, and it looks like we're hovering between 20 and 30. I like this, right? So take half of that. We're looking at between 10 and 15%. Better than most stable options now. Again, this is a bearish strategy. If BNB starts taking off, we're losing money. If it stays crabbish or goes down, we're making money. So that's what you have to consider. When will the market bottom? I don't know. All I want to do is give you strategies to have in every different market condition. We've been bearish since November. The likelihood of this being the bottom is low, in my opinion. Hello, hey, yeah, are you talking? Do you have a question? Oh, I think you muted yourself. Okay. So I think the odds of this being the bottom is I can't tell if you're asking me a question or not. Mara, can you mute him? I can't access the mute to him because of the way my screen is right now.
Yep, I got him muted.
Okay, thank you. And we can unmute during the question part. I don't want to, like, you know, have the poor guy muted the whole time. So again, bearish, crabbish strategy. You can call the bottom if you want to. It's totally up to you. There are many different indicators you can use to predict a bottom, or rather a trend reversal. Bottoms are, I don't know bottoms, but trend reversals, maybe you can find some stronger indicators for that. For me, again, all I'm looking for is having strategies in bearish market conditions, crabbish market conditions, and bullish market conditions. This is, again, a bearish strategy. So let's pause there, because we have about 7 minutes before more questions. And before we get into like really talking about leverage. So questions, guys, what do you got?
Okay, my first question is the strategy seems really cool, and I didn't quite comprehend it until I started watching this and having you like tell me how exactly it works. But when the market starts going sideways, this looks like a really viable way to gain your asset and accumulate while the market's in its accumulation phase, correct? Like if I decided that I think we're close to bottom and we're going to start accumulating for a couple months sideways, forming, you know, a Wyckoff accumulation pattern opposite of what we just saw on the top, I'm going to want to get some AVAX and some Ethereum and maybe some Bitcoin and just hold it in here, and it'll farm it for me. Like I'll accumulate those tokens over time if we just trade sideways for 3 months.
Correct. What I will say, if you are crabbish and not crabbish bearish, or not crabbish bullish, if you're just purely crabbish, the best thing to do is to enter this position without having shorted it initially. So without the initial collateralization of USDC or DAI or whatever it is, without the collateralization and then the borrow, because you will, one, have more initial AVAX, USDC, LP, and two, you're realizing twice the APY. Again, that's being crabbish on the market instead of crabbish bearish. This is crabbish bearish where you benefit from downward action. If you're purely crabbish and you want to maximize your capitalization, you have a lot of faith in crabbishness, then you would want to enter these positions without doing the initial short.
Okay. And so I could just, you know, if I just bought 10 AVAX and I plugged it in here for 3 months and we just went crabbish for 3 months, I would acquire more AVAX according to whatever the APY percentage is.
You would acquire more of the LP token. So the LP token is half USDT or USDC or DAI, and AVAX. So you would acquire that, right? So let's say the
down, I would lose AVAX and gain the stable, and if it went up, I would lose vice versa, or how does that work?
vice versa. So again, if AVAX's value goes up, right? The AVAX that you had, let's say it's 10 AVAX and the value goes up. Now you have to sell some of that AVAX into USD, whatever, in order to balance it out. So maybe now you have 9 AVAX and 9 AVAX worth of USDC or whatever on the other side. If AVAX goes down, your stable is going to purchase the AVAX, so you end up with more AVAX in that scenario.
Well, if it's crabbish, you pretty much have a 25% gain on each side of the LP, right?
That is correct. Yes.
So to answer your question, Greer, you would accumulate, but you would only accumulate directly 25% on the LP, but you could use the additional 25% accumulation on your USDC to buy more of what you're trying to accumulate, assuming you wanted to unstake.
Right. The goal being to accumulate more tokens by staking my existing tokens.
Right. If you're just talking about staking from the LP side, you would only accumulate 25% of the side that you're trying to accumulate. The other 25% would require you to completely unstake out of the LP, convert your LP back into the original assets. Correct, Steven?
25%.
Yeah, okay, so the 25. Let's clarify. If we're saying 25% is the APY, then yes, both sides are increasing by 25%. So if you have $100 of USDC and $100 worth of AVAX, and then those are increasing by 25%, then both of those increase by 25%. If you split your AVAX into USDC and AVAX, what you've done is, well, effectively now you're only getting half of that, so 12.5% on the AVAX side of your initial AVAX that you split, and then you're also now getting 25% on the USDC side. A little bit confusing, but okay, perfect. Right. Yeah, if you bring in outside stables to do that, then yeah, you're getting on both of those things. You're getting the APY, whatever the advertised APY is.
Well, what I was saying is if you had 50-50, 50% USDC and 50% AVAX, and it was crabbish, right? So then you're getting that APY. So are you really getting 25% more AVAX and 25% more USDT? Isn't it just a split between the LP?
So I'm not necessarily sure what you're saying, but let me just say what is happening. So if you bring in both of the assets on your own, let's look at this, for example, USDT AVAX. If you bring that in, what this APY is realized in is LP token. LP token is half USDT, half AVAX. So you're getting 181% on LP token. So in 1 year from now, presumably you'd have 1.8 more, or you'd have, I guess, 2.8 of your initial USDT plus AVAX. So both of those halves increased by 181%.
Okay.
So your USDT side increased by 181%, your AVAX side increased by 181%, but because those are both 50%, you didn't increase by 360%, you increased by 181% times 50% over here, and 181% times 50% over here, because each of those were 50% of your LP.
Right.
I'm out of focus. Refocus.
Okay, so I had...
How much success have you had doing this minus the bear market? Like, before we went into, bear mode, like obviously you weren't short farming, you were probably doing the opposite. Like,
so farming,
how well did this work before, is I guess.
When you say how well does it work, what do you mean? Because farming itself is,
how long did you leave it in there? Did you pull it out with a bunch of profit at the end? Did things kind of just go sour at the end and like it wasn't as beneficial as you had hoped? Kind of like, what was your experience with this round of DeFi overall with farming? Like,
so that is a very complicated answer that is not related to short farming. So I don't want to get too crazy into it, but what I will say is that when the markets are very bullish, I would experience some permanent loss because APYs can't keep up with how well an asset is doing, right? If an asset is going to double 2 times in a week, the APY just can't catch up. So as your LP does increase in value, because the impermanent loss is kind of dragging it up, you're not realizing, you're not 100% long on the asset. So you're not realizing all of that price increase. You're getting APY. I don't know why I keep going out of focus, but on really bullish, it's not good to be in a LP.
I guess I'm just assuming that you can do the opposite of this if it's bullish, but maybe you can't. I don't know DeFi that well.
I don't know what you're at.
So like you can short farm, can you long farm?
Well, yeah. I mean, so long farming would just be entering the position without shorting it first, or without borrowing against it. So you can
when you're short farming, you don't care about the asset. Just to be clear, when you're short farming, you basically hate or don't care. You're indifferent toward the asset. You'll buy it, sell it, do whatever. If you're long farming, you want to accumulate it, so you would never sell it in the beginning.
Oh, okay.
Right. So the only
give you a little perspective on it. This isn't like since the bear market started, because that's probably November of last year. But I've been doing the short farming of Moonbeam GMLR using WePiggy and some other and DeFi, and it's been incredibly profitable for the last maybe 2.5-3 months. So you can definitely do this for extended period of time. And I agree with Stephen that this isn't a short-term strategy. You're not trying to get in and out in a week, but doing it over several months can be quite profitable.
Yeah, absolutely. Like if I knew about this before when I saw 821s cross on weeklies, this is something that would be really great to do.
But again, farming itself is a moderate bearish crabbish or fully crabbish strategy. Farms form best in crabbish markets as opposed to just holding the asset, and they underperform in hyper crabbish or hyper bearish scenarios unless you're short or some sort of leveraged long or something. So do keep that in mind. That is important. And so now I guess we're gonna I think there's some questions in the chat. I'm gonna try to get to those, and then I'll talk about leverage for a little bit. All right, let's get to the ones in the chats first to see if any of them. But I can't move my screen out of the way. It's like directly in the way.
I can read the question if you want.
Yeah, please.
Would it be viable, more profitable start to borrow 2 L1s I'm bearish on, and then short farm on that LP instead of an L1 stable pair?
Okay.
And then he provided a link to Beefy.
Right, AVAX BNB. Got it. So yeah, this is an interesting strategy. If you have 2 assets that move together at a 1-to-1 ratio, then it's effectively a stable pair. That's cool. It's kind of like being neutral on both of them. However, no 2 assets move that tightly together, except for like wrapped Bitcoin and Bitcoin, or wrapped Ethereum and Ethereum. So what happens is you will experience some impermanent loss of one asset or impermanent gain of the other asset. So let's say you do the AVAX BNB, right? You borrow AVAX, you borrow BNB. I mean, we can chart this, but theoretically, if AVAX goes down, what you're going to end up with when you exit your position is more AVAX relative to your BNB. Now, could you sell some of that AVAX to make up for the BNB? Well, you can, but the impermanent loss may be such that you don't make as much of the BNB back. So that's one thing that's important to consider. But if they move together really tightly and you're getting a lot of great APY, then yeah, it's an interesting strategy. L1 should move relatively closely together, but they don't move well enough together for me to be like really comfortable in giving like it's a great idea. I've definitely considered it. Absolutely. All right. I think we have. Let's get one more question from you, Everflow. I think you wanted to ask one, and then I'm going to move on.
Sure. So, would you ever consider DCAing your profits to cover your shorted asset, and or consider say buying 1.5 times what you would want for the shorted asset, just to ensure that you couldn't get caught in a big spike up, to where you don't have you have to spend more to basically close out the position.
Can you repeat the first part of the question? Well, let's answer it in portions.
Sure. Would you ever DCA your profits into the shorted asset? I think you mentioned that
Yeah.
it
So
may
there,
be the same.
yeah. So I get the same effect through a different means. What you can do is, let's pull up the Francium or Francium example again. Let's say I wanted to do that, right? No, yeah, I'm at 3, so that means that Solana's going down. What I could do here, right, is take 1.5 of these Solana this week, right, and then I could go over to Solend, which is my borrowing and lending platform, and I could pay back 1.5 Solana, right, reducing my LTV, reducing my exposure there, and reducing my likelihood of liquidation in a big spike. What I do is realize those profits as USDC, add them to the collateral, which reduces my LTV and reduces my liquidation risks. Same effect, but different ways of going about it.
Okay, so you're securing your profits so that they're not volatile, but you're accomplishing the same goal.
Right. However, what I will say, if Solana goes down, that's great, because then my profits that I actualized are worth more. But if Solana goes up, it's not as great, because then I still do have, like, LTV things to consider and have to deal with.
Now you
go ahead.
have to sell that portion of the LP, correct? Through the exchange, through the AMM.
It's completely dependent upon which strategy or where you're entered in. So, for example, for this one, it's super simple. I can click withdraw. I can click convert to Solana. I can do however much I want. So this is 1.5 Solana, and withdraw, and I will just get 1.5 Solana.
Okay.
So Francium is, in my opinion, one of the greatest DeFi protocols in terms of user experience.
Yeah, I see that. That's really cool, because I was thinking you'd have to sell that portion of the LP, and then you got to convert from. But I'm old school, I'm from DeFi Summer, where
Yeah.
it was just screwed up, and you had the LP, and then you had fees all over the place, going from LP to these coins, and these coins back to this exchange. So I see that that this service could be good.
Yeah.
Would you ever consider doing half, to where you take your profits and do half USDC and half of your shorted asset, so therefore you're getting some collateralization increase in your LTV, but you're also ensuring you have some of that asset already?
Yeah. So I mean, that's a really cool way of doing it, right? You put, let's say I take 2 Solana out, so I leave 1 Solana of profit in. I take 2 Solana out. One of those Solanas gets converted to USDC, adds to collateral. One of those Solana just goes to paying off my Solana debt. If I continuously do that, presumably after a while, my debt's really low and my collateral is really high, and my risk is reduced, while my strategy is presumably continuing to pump out APY and APR, as long as we're crabbish or bearish. Yeah, that's definitely one of many ways to go about it. I like that. I actually hadn't considered it. So now, if you're asking, have I considered it? I just have, and I like it.
And my final question is, do you have a service that you could recommend that would monitor these assets, so that we could be alerted when there's a position move, so that we could take action, so that we don't get caught in a spike, or we could take action in a dip?
So what I recommend is, like, setting up trading view alerts and knowing your risk zones. So, like, if I'm on Solend, for example, and I know that I have to connect my wallet. If I know that, like, I need to hit $45 Solana. I said, this is really low. I have to hit like $57 Solana in order to get liquidated. Well, maybe I set an alert on TradingView for $50. Sends a text to my phone. I say, okay, got to get out before it goes $7 up. You can do things like that, but there's no, like, yeah. You have to do the calculation ahead of time and know where you want to be alerted, and then you can do it that way. Of course, I monitor these daily, so I'm sort of looking at my risks daily, and you can see, like, right now I have a borrow balance of 570, and I have collateral. I mean, this is relatively, and then so my collateral is basically twice my borrow, so I'm at 50% LTV, which means Solana would have to increase by, again, about 60% or so, 60 to 70%, for me to get to that 85% liquidation threshold.
Yeah, because when I was using Mirror, I could use Yahoo Finance because they were synthetic assets. I could just look
Right.
for, Amazon or whatever, but Vista's crypto. So
And here
thank
you can
for
use
that.
TradingView. I got to get into the next leg of this, or else we're not going to get through with it. But thank you for the questions. They were good questions, and they made me think about these in a new and interesting way. So we're going to jump into the leverage ones. And so the first question is, why would you use leverage? It's simply to ratchet up those APYs. How are the leverage risks compounding the risks of just borrowing? Well, let's jump into that. So when you open a leverage position on a really robust protocol like Francium, you get to see all of your risks. So let's say I already have this position open, so I'm going to look at Radium so we can sort of contrast it. Actually, let's look at this one, 1400. This is really nice. So let's open that up. Let's imagine that we have 10 Solana that we're entering this position with. The first thing I'm going to do is click Borrow 2 Assets. Now, here, this is up to you in different preferences, and let's pop open the simulator. If you borrow 100% USDT, you're effectively being very, very long on your Solana. So if Solana goes down, then the value of your position goes down. If Solana goes up, the value of your position goes up. As you move your borrow from USDT over to Solana, you can see things are changing. Right now, this is 0 days. Now, if it goes down, we have some protection. If it goes up, though, we don't make anything. Well, why is that? That's because you're entering the position with Solana to start off with. And then you're borrowing Solana and borrowing USDT. So if Solana goes down, your whole position's value is also going down because the collateral you have is going down. Now, on the bright side, what's going on with your borrowing and lending platform? Well, the Solana is going down in value, but you're accumulating value. So technically, you're going up here. This is positive. Everything in this direction for you is positive. That's what I like about this strategy, because as Solana goes down in value, you're accumulating more Solana in the LP, and so when you go to pay back your Solana in the future, you have surplus Solana, which is really good. Or if you want to be super bearish on Solana, you can go with 0. This is purely borrowing Solana. So effectively what happens here is you have 10 Solana, you're doing 3x leverage, so you're getting yield on 30 Solana's worth. So what happens, you have to borrow 20 Solana. Now you have 30 Solana, you have to split that into 15 Solana, and then 15 Solana's worth of USDC. So you're selling 15 of the Solana that you borrowed. You're shorting 15 Solana. Remember, shorting means you borrow and sell. So you're borrowing 20 Solana, and then you're selling 15 to USDT to open this LP position. So you're shorting 15 Solana, which means if Solana goes down because you're short Solana, the value of this will increase, which is really cool. So not only is Solana going down, and you're benefiting on Solend, your borrowing and lending platform, because you're getting more Solana, you're also at the same time literally increasing the value of your position by so much Solana as it goes down here as well. So this is a very, very, very bearish. I like to go with 25%. I like to be relatively neutral. I know that I'm benefiting this way, but I do want a little bit of upside protection. So let's look here, for example. Here, this is a 40% increase in price, right? 40% increase in price. The strategy is only going to change by 6% in value. Now, when you exit, you're going to have a little bit less Solana. You're going to have to buy a little bit back, but you're not going to have to buy back as much as you would if you were just doing short farming without leverage. The pseudo delta neutrality of this protects you from a bit of impermanent loss. Not all the impermanent loss, but a bit of impermanent loss. Okay, cool. If you want to see what your actual APY is estimated to be, click 365, and it will tell you here 406%. So you would cut that in half, 203%, assuming that Solana stays flat, or remarkably more if the value of Solana goes down. Okay, so I like that. Also, one thing to consider is that you can set your stop losses. You should be able to set stop losses. Maybe not. Maybe they don't have that unless you do it. Oh no, here we go. Whew, I'm blind. You can set stop losses. Let's say you only are willing to risk like a 29% a 29% loss, right? You can set it to 29%, and you can see you would get stop loss here, or you would get stop loss way down here, right before liquidation. These are things you can do. This is why I really like Francium. I know it's on Solana. Solana's not the most favorite chain, but out of all of the leveraged borrowing lending platforms, I think it is the most robust and user-friendly. So let's look at a few other ones and understand how they're not the same as Solana and how their risks differ. Homora V2. Homora V2 has some really great APYs for Avalanche and the Ethereum blockchain. They also have Phantom blockchain, but generally their APYs aren't as good as Taro, for example. But let's just dive right in. So let's start with the Avalanche blockchain, and we'll see how the risks are different. So let's go to AVAX. Cool. All right. Hey, 0.13 AVAX, I'm rich. Let's go to yield farming. Okay, cool. Let's go to by highest APR. As that loads, one of the things that you're going to want to do here to see what the likelihood of these yields staying up is go and check out these yields on Beefy, or go and check out these yields on APY Vision, or go and check out these yields on Coindex, and look at the historical APYs. When you do that, it's going to be less than these numbers, of course, because these are leveraged up, but you just want to look for consistency. So one of the ones that I know is consistent is USDCE AVAX, because I've looked at it on Beefy. And so, you know, it's inflated right now with 590%, but this one has been pretty consistent and should be getting you around 130 to 90, which is good. That range is great for me. I'm getting half of that. I'm happy. You can see the leverage is also higher, 4.21%. So let's click farm. I don't have very much AVAX, but presumably, right, you would first go on to Aave, for example. You would collateralize some amount of, let me put this in dark mode. I know some of you guys are screaming on the inside. Presumably, you would collateralize USDC or DAI or something like that, and then you would borrow AVAX against it, bring your AVAX over to Homora V2, supply it there. Next, leverage, let's go with 4.2. And you can go with their recommended ratios. But when you click advanced, what you're going to realize is that they're borrowing a little bit more USDC than they are AVAX. Now, the reason that is because you're entering the position with AVAX. So to them, you're already long on AVAX, right? You're entering the initial basic chunk, the first 4.1 effectively of your leverage is all AVAX, right? So they're going to borrow a little bit more USDC to make you relatively delta neutral on this. And that's okay, right? As the position goes down, still you are accumulating more AVAX. That's kind of what you want. So no big deal. I wish they had a simulator here that would make things a lot better. If you really want to be short, what you can do, and I really dislike the way this works, is you can borrow more of the AVAX against the USDC. So here's 75.25. If you move this a little off, it's just not going to let you do it. And you can't type in 76% and type in 24%. You can't. You have to literally slide them around. Really frustrating. Don't love it, but it is what it is. What you'll notice though is that if you do this, your liquidation is very close, right? You only have, I know you guys probably can't see this. Let me increase it a little bit. You were telling me to do that earlier. Sorry for taking too long. You can see that I only have 28% or 30% roughly increase in AVAX before liquidation starts to occur. I don't love that, right? We saw a 30% increase in Solana over the past 2 days. I want more buffer than that. So with Alpha Homora, I'm going to tend to go towards their recommendations and their pseudo delta neutrality. So here I'm going to click basic, again, this, advanced, go with these. Maybe you have to go a little bit up or down to get this right. This is around, what, 70%, so I have to go down to about 30. Let's do 50-50 and see where we're at. Here, now, AVAX can increase by 194%, and it can decrease by 30%. I don't love that either. So I'm going to keep playing with these until I find a ratio that I'm comfortable with. And again, unfortunately, they do not have a simulator. Maybe I'll have to build one. But let's go around there, around there. That works. That should give me a little bit more on the AVAX side. Yeah, so now down 50%, I'm okay with that. Up 86%, I'm okay with that. This is good. I might do it a little bit more towards the bar of AVAX, so I'm a little bit more short there. So I have slightly more room for AVAX to go down than I have for AVAX to go up, because again, bearish strategy. But you can move that around. You can see what the total APY is, 472, lovely, like it. Half of that, 230, very cool. And you know, we're on our way. So that's Homora. There is no simulator. The liquidation risks are a little bit different. You do have to play with it. And yeah, there we go. Taro is for Phantom. I like this one because it's semi-similar to Francium in that you can mess with your borrows, but I don't think I have any LP to do this with. I believe they don't let you simulate investments without LP. So we can just look at the opportunities here. But while this loads, I'm going to go to Alpaca. So Alpaca is like an all or nothing here. So let's do... Oh, I'm on the Phantom blockchain. Well, what do we got here? We have... Perfect. FUSDT Phantom. This works. Actually, we'll do DAI, because I like DAI a lot. We'll click Farm. This is 3x leverage. Sure, connect with MetaMask. Switch network. I don't mind. My MetaMask is loading slowly. Switch network. Alright, cool. Farm. So what you're going to see when Alpaca loads is that you can choose to borrow either USDC or Phantom. So what asset would you like to borrow, right? You can either borrow Phantom. Presumably you can also borrow USDC. Maybe they only let you choose Phantom. I don't know. But if you're borrowing Phantom, that means whatever you enter, you're going to be borrowing 2 times that in Phantom. So you're going to be pretty short on Phantom, which is great if you're short, but it's not great if you're neutral or crabbish. So let's just say I enter with like, oh, I have 0.2 Phantom. So maybe it'll let me, yeah, you have to borrow Phantom. Cool, interesting. So you're going to be definitely shorter on Phantom, right? Because you're starting with 1 part Phantom, you're borrowing 2 parts Phantom, and then you're going to be selling 1.5 parts Phantom for USDC. So you're going to be shorting 50% of all of that. Okay, cool. Yeah, so there's that. Pretty good. Alpaca's great when you're in control of what's going on, right? So if you're borrowing the Phantom and then splitting it here and doing this and it's bearish, that's really good for you. We all know that their pseudo delta neutral vaults were underperformed. So Alpaca is another option. They also have good BNB, USDC or DAI strategies, things like that. We're at 953. There's really not much more to talk about except for just like showing you guys opportunities. So instead of doing that, I'm just gonna jump into questions. What do we got? And thank you, Mara, for answering some of the questions in the chat.
Do you have a suggestion for short farming on Arbitrum?
On Arbitrum. So the reason why I hesitate there is because Arbitrum doesn't have any L1 tokens. Because Arbitrum is not an L1, it's an L2 that uses Ethereum. So on the Arbitrum platform, you're not going to be generating a ton of fees from any particular asset on USDC because there's not going to be any one primary asset that's traded the most between some stablecoin and an asset. So generally, you're not going to get as good as of yields. One thing you can do, which is a really interesting form of short farming that I believe Taiki may have came up with. I'm not sure if he did, but you can borrow. Well, you can do a really crude version of short farming, or you can do a more accurate form of short farming. The really crude version is you borrow some wrapped Ethereum against your stablecoin, and then you zap that into purchasing GLP, right? Presumably, GLP's value is kind of like a short farm. Your Ethereum is broken into 50% stables and then a basket of blue chips, which move kind of together. So that's one way to short farm on Arbitrum. But I don't really have any great short farms on Arbitrum, unfortunately. Any other questions?
On Solana or Solana, or however you say it, they've had so many network issues. that would stop a liquidation event, right? I mean, because that's done on chain. If they're, well, I guess my question is, if their network goes down
Yeah.
and I'm close to liquidation via Frankium or whatever it's called, am I getting liquidated, or can they not access the network either, and therefore I can't get liquidated?
Well, let's say that you are close to getting liquidated. Network goes down. You are now in liquidation threshold, right? The price has gone down. You haven't been able to change it. Network goes back up. You're getting liquidated, definitely. So you don't want to be close to liquidation, right? That's why I do a 50% LTV, because Solana has not 2x in price in a 1 day time frame. In a year.
Okay.
So
yeah,
I
would definitely be conservative,
yeah.
but I mean, you know as well as I do, things could happen. So it could be 3 days, right? A lot can happen in 3 days. I mean, I could set my collateralization ratio at 300% and my target and my alert at 175, and then in 3 days it could be down to 150. I can't do anything about it because I can't access the network.
Absolutely, definitely, yeah. So there are risks with Solana, something to consider. Certainly, I mean that's one of the reasons why I like Solana as a bearish strategy, because every time the network goes down, Solana goes down in price. So it's like it's a built-in bearishness, but also built-in risks.
Gotcha. Thank you.
Yep. Oh, I do see someone ask a question about USD Plus, which is a stable coin. I mean, we'll touch on it really quickly. USD Plus is kind of like OUSD. It's like a rebasing index of stablecoin strategies that are, from what I remember, maybe Mara can correct me on this one, none of them are like algorithmic stables. So, you know, a semi-conservative basket of stable yields that you can like LP and still gain the APY from USD Plus. It's interesting. I'd like to see better audits on the ecosystem that USD Plus is part of, though. Let's see. One thing that I do want to sort of really warn you against is thinking that all leveraged yield farms are the same. So let's look at Impermex. All leveraged yield farms are not the same. Impermex is notorious for having negative yields. And the reason that is because their borrow rates on the assets that they borrow from people who are willing to lend their assets. Well, so when you have to know how these things work, right? When you leverage, you're borrowing from somebody. Who is that somebody? It's other DeFi users who are lending their assets to the protocol. So here, their borrow rates go up and down rather dramatically, and when the borrow rate goes high enough, and you've leveraged that borrow rate on that asset, sometimes the borrow rate becomes higher than the APY, and you end up with negative yields. So, like, these look great, right? I love USDC and JPY CV2. This is kind of stable. I mean, the Japanese yen has been doing terrible against the US dollar lately, but still, 875%, that's great. But if you look at, can we see the 7-day? The 7-day average, right? 7-day average is 17%. So more than likely, this is not going to stay here. And I like that they have the 7-day averages. So Matic wrapped Ethereum, 7-day average, 11%. So, you know, do keep that in mind. One thing you can consider is if you just want to do the neutral farming that we talked about in the very beginning, that delta neutral farming where you borrow an asset and get single side yield on that asset. So all of the yield is profit, and then you just return your book when you're done, right? You return the asset. You can click here and look at the borrow APY, or sorry, the supply APY is 26%. That's not bad, right? Go get effectively 14% on your Matic or on your collateralized stable. One of the things I wanted to show you guys with Stater is the interesting Matic opportunities. So if you want to do like neutral farming, delta neutral farming or market neutral farming, what you can do is with Matic X Matic, you can get roughly 40% APY. So if you're doing 50% LTV, right, collateralize USDC, borrow Matic, split into Matic X Matic. Matic X is a redeemable liquid staking Matic. So virtually no impermanent loss. So you're getting effectively 20% on your underlying USDC without risk of impermanent loss, or without any serious risk of impermanent loss. Okay, that's it. I'll take any last questions though. Going once. Going twice.
Steven,
Yeah, go ahead.
so one of the question I have is, based on the price changing, would you be able to set up a limit order to sell your to do a sell? If you started seeing the price, say you had Matic that you were using, would you be able to set up a limit order to sell that?
So you couldn't set a limit order to sell the LP unless you were able to create bots, which some people in the DeFi Dojo can do. Jungle Book might, for example, could do that. I can't do that. I don't have the knowledge. I have a computer science degree. Don't use it very much. So no, like for that to happen, you would need to automate the process of exiting the position, exiting the staking of the LP, and then removing the liquidity from wherever this liquidity came from, so mesh swap. And then you'd have to take those assets to some sort of exchange, whether decentralized or centralized, and sell those assets. So all of that would have to be automated for you. Now, unfortunately, so the answer is kind of no, unless you can automate that process by hand.
So you have to know the contracts and the methods in the contracts to really do that.
Yes.
Okay.
All right, that's it.
Yeah. Thank you.
Yeah. Do you have any other questions?
No, thank you.
Okay. Yeah, my pleasure. Hopefully you guys like this. If you have any feedback on the format of the seminar, feel free to just let me know, either in the dojo, in a private message, whatever you want. If you have any seminar ideas that you really would like to learn more about, send any of the mod team the ideas, or send me a direct message, and we'll see what we can do. I like doing these. I miss teaching, so this is kind of a nice in between. Thank you so much for watching, and have a wonderful rest of your